Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, April 10th, 2012 is sponsored by Realtic. All right, guys, we have a major sell-off on Wall Street again today. Second day in a row, we've seen some big losses. 2 days down on the Dow, 300 points dropped. We have not seen this in 2012. It's been months, if not multiple quarters, since we've seen this type of downside action in the market, and it is coordinated perfectly with the cycle date that we gave to our members here at InTheMoneyStocks.com, and the shorts that we have on the board are now printing money for us across the board. All right, let's take a look at what exactly we were talking about. Well, if you go to your 60-minute chart right now, and we essentially zoom in just a little bit going back to mid-March, this is where the cycle date call went out. And the cycle date, again, is a very important thing to understand. Most people don't understand it, frankly, because they're just not in tune with the markets enough, in tune with the methodology enough here at InTheMoneyStocks.com. But I'm going to explain it right now and lay it down step by step. First off, you have to understand the market was going vertical nonstop day after day leading into the cycle. And you can see it by zooming out. I mean, look at this move up, going all the way back to really here in November. And this move up, dramatic vertical move, especially this section of the market, just going perfectly higher day after day nonstop. You come into the cycle date, and the cycle date again, and this is what's very important to understand, coordinated with essentially a change in psychology. And that's what the markets are, folks. Remember, you're not trading stocks when you trade. You're not investing in stocks when you invest. You're investing in psychology. You're investing in emotion. When people's emotions are bullish, when they're greedy, the market goes up. When they're scared and they're fearful, the stocks go down and the markets go down. So essentially, you're trading emotion. So when you understand cycles, you begin to understand human emotion. And essentially, right here on this specific day, this is where the cycle began. And the cycle essentially began with a shift in psychology, in emotion, in the human psyche, the human condition, to the point where it went from extreme bullishness to more of a tepid pace and what we called a rounded top. And a rounded top is associated by distribution, which is where the institutions unload into the last retail buyers. The last retail buyers in the market are buying in, and the sellers obviously are the institutions. And that's why you got a rounded top, which is 100% what we called for here, which was a little bit of a move up, and then a move down, and then a move up, and a move down, move up, and move down. You get that kind of rounded nature to the market. And that's the beginning portion of the cycle. That lasted for about 2 to 3 weeks. Then, all of a sudden, last week, the rounded top was in, and you started your fall. And this fall was a beauty, folks. Starting late last week, we dumped out. Wednesday, Thursday, bear flagged it and continued the breakdown. And now from this high on the spiders, you are literally down 6+ points, about 5% on the markets. Great correction so far, great cycle turn. And again, the key was to slowly pick up shorts all during the rounded top, essentially going on the side of the institution, since they're the ones controlling the money flow and the stocks, and slowly accumulate those shorts and wait for this down move. And today alone, Bank of America, I took off my second half for a 15% profit. We have stocks out there on the short side like Microsoft, like Google, and many, many others that are in the money now. And it's just a matter of essentially understanding the market, understanding the charts, and reading them appropriately. All right, so that's what we have going on right now, folks. And again, today the markets are now back to the lows of the day. You have a little bit of a double bottom support here on an intraday basis. The Dow Jones Industrial Average is down 198 points. NASDAQ is down 53. S&P 500 is down 23. That's about 1.5 to 2% across the board just today. Just today. And again, if you were a member here at InTheMoneyStocks.com, you should be rocking and rolling right now. Okay? And again, if you're not a member, what do? Well, you come take the 7-day free trial and test it out. Don't believe what I'm saying here in this video. Go test it out for yourself. Join the research center, which is geared towards swing traders and investors. That's the research center, again, geared towards swing traders and investors. If you want more intraday action, if you want live calls, live charts, live questions, and Q&A, you take the 7-day free trial to the intraday stock chat, just like that. All right, let's go over a couple other things. Let's take a look at the dollar. What's the dollar doing today? Dollar's really not doing a lot. And you might say, well, how come the market's falling today? Essentially, Europe is a mess, guys. And I've been calling for this. I've been saying nonstop that you'd have more rumblings in the European issues, that it's not over yet. over there. They're not all perfect. And all of a sudden, we saw a bad bond auction last week in Spain. Now you see Italy and Spanish yields just skyrocketing. I think Italy was down something like 3 to 5%. Same as Spain today. Their markets were down huge. A mini crash there. And again, it's all about seeing what the market's doing, understanding it, and picking it out. And the funny thing is, I mean, I can tell you how many times I've heard nonsense, and it's just BS, frankly, just to put it plainly. But I heard people saying, 2, 3 weeks ago, oh, this market could go up forever. We could go to, 2,000 on the S&P 500. Wrong, because they don't know what they're talking about, frankly. And then I heard other things like, oh, the economic news is so good. I don't see how this market's going to correct. Wrong. You don't know the charts. You don't know what you're talking about, frankly. Learn the methodology. All right? Stuff like that is this hype on Wall Street that will make you a losing trader, that will make you someone who loses more than you win. If you're not ahead of the game, you're losing. It's that easy. And I heard other comments. I mean, I'm just going over things I've heard out there in the media and out there. And I've heard people say, oh, well, you can't short and go against the trend. Wrong again. If you didn't go against the trend, you just missed one of the best falls in the market in the last 4 or 5 months at least. All right, you have to know your master levels. Now, I'm not saying arbitrarily short strong stocks. You must know your levels. If you knew the cycle date, if you knew what to look for, if you knew a trend line, and let me go back to the SPY. We'll show you this right now. If you knew this triangular pattern, or these parallel lines right here, and you saw the bear flag here, you knew it was going to break down. If you saw this pivot high, which I called out to my members last week and said this is from this point we should drop, you nailed that top. You can go against the trend. You just have to know what you're doing. If you don't know what you're doing, you're screwed, frankly. It's that simple. All right? So bottom line is, folks, there are many people saying a lot of nonsense out there, but the proof is in the pudding. Where's the money flowing? Is it in your pocket? I know it's in mine today, that's for sure. Have a great afternoon, guys. I got to get back to trading. There's too much money being made on this day today. I will talk to you all soon. Come take the 7-day free trial here at InTheMoneyStocks.com. Remember, research centered geared for swing traders and day traders more for the intraday stock chat. Take care.